Folks, here's Marcelo Torres from TradeWiser with one more educational video for you guys. Okay, why is this an educational video? Which the Bitcoin will be my next video, but I'm gonna use the Bitcoin for my video right now. Okay, why do I choose do my analysis and my strategies the way I do it? Because first of all, I use 5 different time frames, which is hour, 4 hours, 1 day, 1 week, and 1 month. Why is that? I want to know what is the trend for each one of these periods. This way, one confirms or uh, reverses the other one, and so on. This way, I can always know if I am going to trade on the same direction of the trend. Okay, this is my point. Um, Counter trend trading is risky because you don't know how far this counter trade move is gonna do. This way you might not have enough spread to make money. Okay, so this is my point. We have to go towards the trend in order to have the best spread possible. That's my point. Okay, so for instance, this last night and today by the early morning, you guys saw that I was sending a lot of comments about the trend, about the volume, about a lot of stuff. Why did I do that? Because this is the way I monitor using my cell phone, okay? Using Trend Trading View via cell phone. It's an easy way for me to follow the market in order to see how the movement is going and if it's time for me to put my just build a quick trade, scalper or a swing or a day trade. 3 weeks ago, I did a day trade. It took me 2 days. I made 19%. Not bad. And then the market came down and I stayed with my profit. So this is how I do. But of course, I'm looking forward for the halving, expecting it to sky high. And if it does, I have some BTCs inside my wallet in order to make profit with this. So this is what I try to do. I try to figure out where is the best point for me to buy and hold. Okay. So for instance, something and there's another point. I always keep my eye to see how the trade is going. What are the figures that are being built while the prices do their movement, their accumulation, so on. So for instance, I've been saying for the whole week that price is trying to overpass this downtrend black dashed line, and it did not do that, but it did lose the uptrend channel. It lost the uptrend channel right here, which means that the channel wasn't, let's say, tough enough to hold and support the price, but the downtrend dash black line was very hard to be overpassed. So this was a scenario that I found, and my business here with my analysis is to do a risk management. Point. Dot. That's it. Okay, that's my point here. I have to do risk management in order to figure out where do I have a risk going on so I can draw my scenarios and figure out what is the best strategy for me to work on it. Okay, so I go from the smallest period of time to the largest one. I figure out what is going on in between these 5 time frame periods, and I do my business on the smallest one or even lower. Okay, like I have the 1 hour as my smallest one. I can do it on the 30 minutes. I can do it on the 10 minutes. I can do it on the 15 minutes. I can do it on the 5 minutes, whatever. Sometimes I do it on the 1 minute. Okay. My buddy and myself here, we're building a bot to auto trend for us. It wouldn't be a high frequency trading. It would be just a regular one, but we trade on the second. So we have this scenario built in order to see how things are going in order for me to trade. Okay, but when you go with a bot, you have a series of other stuff that goes into it since it's automatic. When you're doing everything by hand, you don't have that much speed, time, and tools for that. Okay, so you have to do it some way different. That's why I use different time frame, and I call it a frac trend. Frac trend. Okay, FRAC trend. Frac trend. When I look more than two different time frames, and I use the strategy that I call a top trend when I just look two different time frames. Okay, so I just want you guys to understand how I do my business here. Okay, in order for me to, I don't tell you guys buy this or sell that or hold. What I tell you guys is this is what the trend is telling me. This is what I see. This is what we have to be careful. This is where we have an opportunity. Dot. That's it. Point. Okay. That's my business here. So, for instance, if we go to the 4 hour chart, let's go for the 1 week. So, in a 1 week chart, okay, we have one candle being built, but this one candle is being built by 7. Let me come back to you guys. 1 week candle is being built by 7 1 day candle. Okay, so this is my point. If you keep monitoring 7 days and see what each one of these days are doing, you're gonna be able to confirm or dismiss what your previous analysis for the week is telling you. This is my point. So when you go, for instance, we go for a week, 1 week, we have 7 days. When we go for 1 day, we have how much you want. For instance, I go for 4 hours, right? So we have six 4 hour candle. Okay, so we have 6 candles to monitor during the day to see how it's gonna affect the daily candle, and if it affects positively. What I mean with positively is that the daily chart was telling me a situation, and the 4 hour chart came in the same direction of that situation, making it favorable. That is my point. Got it? So now if we look at the 4 hour chart, 4 hour chart, with one 4 hour chart, we have 4 1 hour bar. So if I look what is happening on these 4 1 hour bar, I know how it's going to affect my 4 hours bar. Got it? So this is my point. If I say right now we see that the 4 hour chart is telling me that it is building a bottom reversal, and each day we've been seeing this for this whole week. We see that the move that the price is doing is affecting positively my 4 hour bar. Okay, so for each one of these 4 hour bars to affect positively, I have to have a positive move on each one of my 1 hour bar. If like for instance, it was positive on my first bar. My second bar, it was also moving positive. My third bar was also moving positive. So my 4 hour 1 bar was increasing. Then the last 1 hour bar didn't go positive. So it shrunk just a little bit my 1 4-hour bar. And this is how it looked like. See, it is totally positive bar. Let me get it right here. It is this one right here, the green one. So we have a nice one. And then after 5 p.m. Brazil time, -3 UTC, it started a new one, a new 1 bar 4 hour. Okay, and now we have the first bar 1 hour that is building that 4 hour bar. So we expect to see a second bar right here. We expect to see a third bar and then a fourth bar, and see how these four guys are gonna affect my 1 hour, my 4 hour 1 bar. So while these bars are affecting positively the way my top trend is moving, then that's good for me and my trade is guaranteed or almost guaranteed. Of course, there's no total guarantee here. So this is my point. So for instance, today by early in the morning, I was checking. I made a buy position, and here it goes on. I made a first buy position last night on 7,200, and then it got me at midnight. I was sleeping, so I couldn't try to hold it to buy cheaper. So I just now I'm holding this buy that I did. So I put a second buy at 6,900, and then it got me again. But after that, I saw that it was moving, and then while I was waiting for this buy to happen, I figured out that I missed uh, a a bullish wedge right here, which is the black one right here and right here. See? So, as you guys can see, prices are having a hard time to break this downtrend blue solid line. See? But it is going towards the bottom of the upper trend channel, the pink one, which means that it could break out the uptrend line, which is this one right here. It's the bottom line of the tunnel of the channel. Okay, so it still didn't get there. So we have this whole time right here to see where prices are going to break out, but it has to overpass this downtrend line. So we have a situation here to be analyzed, to be watched, and in case it does not break out above the downtrend blue solid line, definitely it will break out the bullish wedge, which has a negative or a bear reflection, which is represented by my vertical blue arrow. Where did I get this guy? I got it from here by the entrance of the bullish wedge. See right here. So now the measurement right here. I put it on where it could break out. And why did I put it on that position? First, because it didn't break out yesterday. Okay. Second of all, yesterday. Yeah, today. It didn't break out today yet. Second of all, I got this horizontal arrow, which was built right here. So I got it. Which was the first time the last time it touched here, and where was the next time it touched? Right here. So I got this measurement and I bring it back to here. So this is my point. So we might have a good opportunity to see a breakout going on this point here. And if it does, it's going to go down. And how far it could go? It could go to 4,900. So it seems impossible. It seems strange. I've been telling you guys for a while that I see prices going up. Here you go. I see prices moving up while the average of the volume is going down. This is not right. It's not supporting the uptrend of the price. So I expect to see it going down. And then when I check other situations like my volume wave, it is fading a positive wave. So definitely, sir and madam, something is going to go on negative here. So what did I do? I got my buy position on 6900, and I sold it with profit, and now I'm waiting for it to drop again. That's my point. As simple as that. Okay? So, folks, this is what I wanted to bring you guys. The way I think, my business here is risk management, and I use technical analysis to help me figure out what is going on with the market on different time frames. And that helps me know where I should get in or stay out of a trade. Okay? And what kind of trade I should work with. All right? I was doing this same strategy on the office where I was a strategy and trading manager. I built this whole solution for them. So we used to look at the 1 hour period as the top trend, and I told the guys, look, we have a 1 hour trend going on. It's going up. So you guys can buy as much as you guys want and sell as much as you guys want while the uptrend is going on the 1 hour chart. And then these guys were just like making tons of money because they were expert on trading. There was a guy that had like on less than a week, he had like 28 trades. He was doing like 8%, 10%, 11%, 12%, 28% with a lot of money. It's not peanuts, with a lot of money. I said, "Whoa, things are working for you." He said, "Yeah, thanks on your strategy." I said, "Okay, so I'm doing my business right." Okay, that's it, folks. I just want to remember you guys that this educational analysis is available on Twitter, Facebook, YouTube, Telegram, TradingView, and LinkedIn. That my disclosure says that my opinion is just my opinion. Build your own, please. Just consider my educational tips and way to do analysis. Okay, and please like this video. It's very important for me. And why not follow me on one or more of my social networks? You're gonna love it. And I am using Telegram as my intraday channel to speak to you guys. Okay, what I see is what I tell you guys. All right, that's it, folks. With this educational analysis on hand and you guys understanding how I think, now it's showtime. Take care.